Hey everyone. I'm just one person, hidden deep in the countryside, surrounded by silence, but I built BlockSonic to speak with the entire world. Here, you don't get noise, you get the pulse of Bitcoin, every single day distilled into pure, essential updates. No teams, no sponsors, no filters. Just me, a signal from the quietest place on Earth, bringing you the most important Bitcoin news before the world wakes up. With BlockSonic, you don't need to search for information. I research, I write, and I tell the story behind every headline. I do the digging. I chase the truth. All you have to do is listen. Today, the news revolves around ARK Invest's bold bet on cryptocurrency amidst a tumultuous market. We're diving into how they've just committed $19.0 million to bolster their holdings in crypto stocks like Coinbase and Robinhood, even as Bitcoin faced a dip to its lowest point since late 2024. Now, while this buying spree might seem promising, let's not forget that fiat's so-called stimulus is just a euphemism for redistribution, distorting real value. We'll also explore how behavioral biases could influence Bitcoin's future trajectory, with key indicators suggesting a potential bounce, despite lingering volatility and outflows from Bitcoin exchange-traded funds. So stick around as we unpack these dynamics and what they could mean for you. Trust me, you won't want to miss this. ARK Invest doubles down on cryptocurrency despite market turmoil. ARK Invest has strategically increased its holdings in several cryptocurrency firms, investing a total of $19 million on Tuesday, despite the ongoing market downturn. The investment manager based in St. Petersburg, Florida, allocated $2,410,000 in Circle shares, while also purchasing $3,460,000 in Bullish and $631,000 in Coinbase. Notably, Bullish is the parent company of CoinDesk. In addition, ARK invested $7,810,000 in Robinhood, $3,250,000 in Bitmine Immersion Technologies, and $1,800,000 in Block, the fintech firm led by Jack Dorsey. These positions are held within ARK's exchange-traded funds, including RKK, RKDW, and ARKFN. Despite the recent sell-off that saw Bitcoin fall to its lowest point in over a year, ARK's investments signal confidence in the long-term potential of these companies. Over the past few days, Crescial and Coin experienced a respective decline of around 4.5%, while BSS dropped just under 4%, mirroring the broader market sentiment. This recent buying spree reflects ARK's commitment to capitalizing on perceived undervaluations in the crypto sector. However, it is important to acknowledge that this behavior is influenced by the distortions of the monetary system, which often leads investors to pursue speculative opportunities rather than sound investments. In a truly healthy economic environment, capital would flow towards productive endeavors rather than mere financial engineering. Behavioral biases may influence Bitcoin's future trajectory. The current bear market for Bitcoin, which recently saw prices near $76,000, is characterized by the potential for deeper declines. Analysts suggest that only macroeconomic shifts, such as interest rate cuts and clearer regulatory frameworks, could alter the outlook. However, two behavioral biases, anchoring bias and regret aversion, may significantly affect investor sentiment. The previous bull market lacked the typical exuberance seen in earlier cycles, leading to a cautious approach from investors who fixate on past price levels, such as $100,000, and perceive current values as too high. As Bitcoin trades lower, those who hesitated may experience regret aversion, prompting them to buy during dips. This scenario illustrates how distorted price signals and weak monetary principles create a climate where investors react to short-term fluctuations instead of focusing on the long-term value of sound money. While underlying macroeconomic factors will continue to play a role, it is essential to remember that true recovery hinges on return to sound money principles and a decrease in reliance on speculative behavior. If you believe in what we're doing and want to support BlockSonic's growth, just scan the QR code on the screen or copy the link in the description. Every contribution makes a difference and helps us keep delivering quality, independent, and up-to-date content for you. Bitcoin bottom indicator highlights recurring market patterns. Amid the tumultuous crypto landscape, a robust on-chain indicator may serve as a guiding star for identifying Bitcoin's market bottom. This metric evaluates the balance between Bitcoin wallets in profit versus those in loss, revealing critical insights about market sentiment. When the number of wallets holding profits converges with those facing losses, historical data suggests that bear markets often reach their nadir. Currently, 11,100,000 Bitcoin are in profit, while 8,900,000 are in loss, indicating a potential convergence that could signal a market reversal. This pattern has repeated across cycles where convergence points have historically marked definitive bottoms. The reliance on such indicators illustrates a fascinating intersection of market behavior and economic incentives shaped by monetary distortions. In a sound money context, these indicators would be unnecessary, as stable money would lead to more disciplined investment strategies and reduced volatility. As the market grapples with its current state, the focus should remain on addressing the underlying monetary issues that perpetuate these cycles of boom and bust. Crypto market stabilizes after significant declines as Bitcoin and Ether recover. The cryptocurrency market is experiencing a momentary stabilization following a sharp downturn, with Bitcoin and Ether rebounding from recent lows. Bitcoin is currently trading at approximately $76,000 after dipping to its lowest price since November 2024. Despite the rebound, the broader market remains volatile, with altcoins displaying mixed performance. This recovery follows a brief respite provided by U.S. legislative actions aimed at avoiding a government shutdown, which momentarily boosted confidence in equity markets. However, it is critical to acknowledge that these movements are symptomatic of a monetary system that encourages speculative behavior rather than sound investments. The volatility witnessed in the crypto sector is a direct consequence of monetary manipulation, which distorts the true value of assets and undermines capital formation. A genuine recovery would require a shift towards sound money principles that prioritize stability and long-term thinking. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's oversold conditions signal potential bounce. Bitcoin's relative strength index, a popular tool for gauging market conditions, has fallen below 30, indicating that the cryptocurrency is currently oversold. This suggests that the recent sell-off may have been exaggerated, raising the possibility of a relief bounce. While the relative strength index can provide insights into market momentum, it is essential to recognize that such indicators are often influenced by the prevailing monetary environment. The reliance on technical analysis, such as the relative strength index, reflects the speculative mindset fostered by weak monetary policies, which prioritize short-term gains over long-term value. Despite the potential for a bounce, the fundamental issues surrounding Bitcoin's value proposition remain unresolved. The cryptocurrency must establish itself as a sound monetary system with verifiable scarcity and resistance to debasement in order to escape the cycle of volatility driven by monetary distortion. Bitcoin exchange-traded funds face outflows amid market volatility. Recent trends show that Bitcoin exchange-traded funds have experienced substantial outflows, totaling approximately $272 million, as investors pivot toward Ether and SRP-linked products, which are seeing net inflows. This shift reflects a growing divergence in investor sentiment regarding major cryptocurrencies amid ongoing market fluctuations. The significant withdrawals from Bitcoin funds coincide with the asset's volatility, highlighting the influence of risk aversion on investor behavior. As Bitcoin increasingly aligns with macroeconomic stress and fluctuations in equity markets, the tendency to retreat from perceived risk becomes apparent. These developments underscore the vulnerability of a monetary system reliant on fiat structures, where capital flows respond reactively rather than proactively. In a sound money environment, investments would exhibit greater stability, with capital allocated based on long-term value rather than short-term market movements. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's anti-strategy ETFs flourish amid market decline. While Bitcoin and its related assets struggle, an exchange-traded fund designed to capitalize on downward price movements has reached unprecedented highs. This fund aims to deliver double the daily performance of declining Bitcoin holdings, reflecting the persistent volatility in the cryptocurrency market. The existence of such financial instruments highlights a concerning trend in the current monetary landscape, where speculation and financial engineering often overshadow authentic value creation. The Granite Shares 2x short EMI stored daily ETF has performed exceptionally well, benefiting from the substantial decline of the Bitcoin holder strategy. This scenario illustrates the repercussions of a monetary system that encourages short-term gains over genuine investment. Effective investment strategies should emphasize capital formation and sound money principles rather than depend on leveraged bets in a challenging market. Bitcoin rebounds as market sentiment shifts, yet caution remains. The cryptocurrency market is experiencing a rebound, with Bitcoin trading above $78,000, although this rise occurs against a backdrop of cautious sentiment. Recent volatility has driven total crypto market capitalization up by approximately 1.7%, indicating a modest recovery from prior declines. While the increase in prices may seem encouraging, the underlying market dynamics reveal a more profound issue within the fiat monetary system. Investor behavior in this context, characterized by short-termism and speculative positioning, exposes the vulnerabilities in capital allocation, driven by weak monetary principles. As altcoins display mixed performance, the cautious tone in the market underscores the need for a departure from fiat-induced market distortions. True resilience in the cryptocurrency space will only be realized through adherence to sound money principles that promote long-term investment strategies. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. These simple actions really help the project grow and keep BlockSonic running at full speed every day. Market dynamics reveal collateral death spiral in tokenized silver. Recent volatility in tokenized silver has surpassed Bitcoin's movements, resulting in significant losses for holders. Hedge fund manager Michael Burry has described this situation as a collateral death spiral, driven by the interconnectedness of leveraged positions within the crypto market. This phenomenon illustrates the risks associated with excessive leverage and speculative trading in a fiat-driven system. But as prices decline, forced liquidations intensify downward pressure, creating a feedback loop that undermines market stability. Burry's observations emphasize the vulnerability of a system dependent on thin liquidity and high leverage, where participants are ensnared in a cycle of panic selling. The emergence of tokenized metals contracts as trading instruments raises concerns regarding the underlying custody and verification issues associated with these products. In a truly sound monetary environment, reliance on speculative trading would be minimized, and assets would possess intrinsic value, fostering a more resilient market. Burry cautions about repercussions from Bitcoin decline on precious metals. Investor Michael Burry has voiced concerns that Bitcoin's recent decline could lead to significant sell-offs in precious metals, with potential liquidations reaching up to $1 billion. He suggests that institutional investors may be compelled to liquidate profitable positions in gold and silver to cover losses incurred in the crypto market. Burry's analysis highlights the interconnected nature of financial markets under a fiat system, where distress in one asset class can trigger cascading effects across others. The lack of a solid foundation for Bitcoin, which he argues lacks a sustainable value proposition, raises questions about its role as a digital safe haven. In a healthy monetary and assets would be valued based on their fundamental qualities and utility, rather than being subject to the fluctuations of speculative trading. The potential for forced liquidation underscores the vulnerabilities associated with reliance on fiat currencies, which can distort market signals and lead to a misallocation of resources. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's extreme volatility triggers significant liquidations. Bitcoin recently experienced sharp price fluctuations, dropping to a 14-month low before recovering above $76,000. This volatility resulted in over $740 million in liquidations across digital asset derivatives, reflecting the broader uncertainty in the cryptocurrency market. The forced liquidations of long positions highlight the risks associated with a speculative environment influenced by monetary policies. As traders pursue short-term profits, the market becomes vulnerable to rapid changes, creating cycles of boom and bust. The prevailing bearish sentiment may suggest a potential counter-trend rally, yet the fundamental issues persist. The dependence on traditional monetary systems fosters an atmosphere where discipline and long-term strategies are sacrificed for immediate rewards, leading to market instability. Embracing sound money principles is crucial for breaking this cycle and encouraging genuine capital formation. Bitcoin's price range suggests potential consolidation ahead. Bitcoin has been trading within a narrow range of $70,000 to $79,999 for an extended period, indicating limited historical trading activity. This thin market structure raises questions about potential consolidation or further declines. The lack of substantial trading volume in this price range underscores the vulnerability of Bitcoin's current position. In a healthy monetary environment, prices would reflect authentic supply and demand dynamics, leading to stronger support levels. Instead, the current situation illustrates a broader distortion that hampers true price discovery. As Bitcoin navigates these price levels, the focus should shift to creating an environment that supports capital formation and long-term investment, rather than remaining entrenched in speculative trading patterns. Crypto prices stabilize as government action mitigates panic. The cryptocurrency market has paused its relentless decline following the passage of a funding package by the U.S. House of Representatives, which will allow the government to reopen. This development has provided temporary relief for Bitcoin and other cryptocurrencies, which had recently dropped to their lowest levels since before the last election. Despite this stabilization, the underlying issues within the crypto market remain unresolved. The reliance on government interventions to stabilize prices reflects the vulnerabilities of a system built on traditional currencies, where market participants often seek external support rather than cultivating resilient, self-sustaining ecosystems. Achieving true resilience in the crypto space will require adherence to sound money principles that prioritize long-term value and capital formation over short-term fixes influenced by external pressures. Galaxy CEO addresses concerns over quantum computing's impact on Bitcoin. Galaxy CEO Mike Novogratz has downplayed the potential risks posed by quantum computing to Bitcoin, suggesting that recent sell-offs are more sentiment-driven than based on actual threats. While some investors cite quantum technology as a reason for selling, Novogratz believes Bitcoin is well-positioned to adapt. The ongoing discussion surrounding quantum computing highlights the speculative nature of the current investment climate, where fears can lead to irrational behavior. In a sound monetary environment, assets would be valued based on their intrinsic qualities, rather than swayed by external anxieties. Moreover, the conversation about early Bitcoin adopters selling their holdings raises questions about the commitment to the HODL philosophy. The shift away from steadfast holding indicates a growing influence of short-term thinking, driven by pressures that encourage reactive rather than proactive investment strategies. Bitcoin faces challenges amid broader tech sector declines. The cryptocurrency market has been negatively impacted by a broader sell-off in the technology sector, with Bitcoin recently falling back to approximately $75,000. Major declines in tech stocks have contributed to this downturn, reflecting the interconnected nature of financial markets under traditional monetary systems. As Bitcoin's price fluctuates, it serves as a reminder of the risks inherent in a speculative environment that prioritizes short-term gains over sustainable growth. The ongoing volatility underscores the need for a return to sound money principles that promote long-term planning and capital discipline. While some analysts suggest that the current bear market may be nearing its end, the vulnerabilities of the system remain apparent. A fundamental shift towards sound money is essential for creating a more stable and resilient market environment. Thank you so much for following BlockSonic today. See you soon with more news, analysis, and market alerts. Keep an eye on Bitcoin and continue listening to the sound of the blockchain.